Good afternoon, this is Sean Golding with Golding & Golding. The purpose of this presentation is to serve as a help guide, let's call it, to some of our more recent posts that we've updated regarding FBAR penalties, willfulness and non-willfulness. Over the past year, there's been lots of changes to the FBAR, whether it's the Supreme Court in Bittner that limited non-willful penalties, as well as some other court cases that are establishing that recklessness qualifies for willfulness, and possibly making a treaty election may eliminate the FBAR requirement for the portion of time that the person is considered a non-resident under a treaty election. Let's go through some examples of how to determine willfulness and non-willfulness, okay? And before we start on this, these are just illustrative examples. If your facts are somewhat similar, we've represented thousands of people, several thousands of people over the time we've been doing this. And so your facts may be similar. That doesn't mean that you will necessarily qualify as willful or non-willful. Each person's fact scenario is going to be a little bit different. Each person's facts are individual. And so it's important to really look at your own facts, and you can, listen to the presentation, get an idea of what's considered willful, what's considered non-willful, but it's by no means dispositive of your specific situation. Okay, so first, like I always like to start, is who even has to file the FBAR. When dealing with individuals, it's typically three categories. It's U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. The latter category is like a catch-all category. You're here on an EB-5 investment visa. You're here on an H-1B work, L-1 transfer, B-1, B-2 tourist visa, and you meet the number of days over a 3-year period using a 1-to-1, 3-to-1, and 6-to-1 ratio. You too may be subject to U.S. tax on your worldwide income, even though you're not a permanent resident or citizen. It includes having to file the reporting forms. So let's start with non-willfulness, okay? And as you go through your research quest online, you're going to find a lot of nonsense and a lot of garbage. A lot of tax attorneys who claim to be board certified when they're not. They claim to be specialists or self-proclaimed experts because they have a few years of experience, or they think very highly of themselves. At the end of the day, most of the time, when these attorneys automatically scare you into believing that you're willful, it's a sales tactic. Most of the time, taxpayers are non-willful. Most penalties are non-willful, okay? So here's a common example. Jeff became a new lawful permanent resident. He's been filing for a few years. He had these accounts before he came to the United States. He didn't have a CPA until recently because he recently started his own consulting business and felt like he needed something beyond TurboTax for the year. Talking with the CPA, it turns out that he should have been filing the FBAR. He learns about it. He wants to get into compliance. This is probably not willful, right? Didn't know about it. Really, why would he even think there was anything to do? He didn't open these accounts after coming to the U.S. These accounts happen to be non-income producing accounts, so it didn't even occur to him, okay? Another very common example is Jane. Jane comes to the United States. She has some foreign accounts that are under $10,000, but she previously worked in Australia. She has a superannuation worth $400,000. Well, she was under the misimpression that you only have to report bank accounts. Oftentimes, when you see verbiage or language online about the FBAR, it's regarding bank accounts. So then she didn't file the FBAR, and then she's talking to a buddy, and she learns, oh, I didn't realize pensions are also reportable, and when you factor that in, I should have done FBAR, I should have done 8938. This too is presumably non-willful. There was no intent. It's not like she knowingly did it. It's not really reckless. It's just she didn't know. People make mistakes, right? Another very common scenario that falls in the non-willfulness is the $10,000 threshold. It's more than $10,000 in annual aggregate total. If Peter has 15 bank accounts with $1,000 in each account, sure, none of the accounts are over $10,000, but when you aggregate the total of all the small accounts, it exceeds $10,000. As a result, Peter has to report all of the accounts on the FBAR. So it's not a per account $10,000 threshold or more than $10,000. It's in total, okay? These are your classic sort of non-willful examples. There's hundreds of others, but these are some common ones we see often. Now moving on to willfulness, okay? Now, what makes willfulness so complicated is that it doesn't have to be intentional. When someone throws around the term willful, you think intent, right? He willfully tried to do it. She willfully intended to do it. For FBAR purposes and lots of other different types of purposes with international reporting and other non-international aspects, it doesn't have to be intentionally. It could be reckless disregard, reckless behavior, willful blindness, intentionally not knowing, intentionally not letting yourself learn something that you should know, you had the opportunity to know. So let's take an example. Deborah decides to go to a new CPA. She's a U.S. person. She has foreign accounts, right? In talking with the CPA realizes that Deborah has foreign accounts and asks Deborah about it. Deborah goes home and does her own research and goes, oh, geez, I don't want to report these accounts. I'm going to end up going to prison for 100 years or whatever other nonsense she finds online. So she, blocks the CPA from her phone. She doesn't talk to anyone about it. Her research is letting her know that she's supposed to do it. Her CPA, wanted the information because they basically discussed that there's some reporting that may be required. She intentionally doesn't give it to the CPA. Even if she doesn't end up using that CPA, she has that knowledge that she should be reporting or she should dive deeper into it. That's probably a form of willful blindness or reckless disregard. Another common situation, especially recently with the Form 3520 automatically assessable penalties, is taxpayers miss a form and then they don't want to file other forms. So Peter, if I didn't use that name already, has a Form 3520 filing requirement. He also has foreign accounts. Peter learns in the current year that he should have filed Form 3520 to report a gift he received from his sweet grandma overseas for $400,000. That money is in foreign accounts. Peter gets all freaked out because he reads about the automatically assessed penalties. Understandably so. He's very concerned. He spoke to a couple of attorneys. They want to charge him $100,000 or whatever other ridiculousness, and he doesn't want to deal with it. So he doesn't file the 3520 and he doesn't file the FBAR. Why? Because he's concerned that there's a roadmap between the FBAR 3520. He reads about potential wire transfer audits and FATCA and all this stuff and decides, you know what? If I don't file FBAR and I don't file 3520, then they can't find me. This is obviously intentional. It's willful. He knows he's supposed to report it. He learned that he's required to, but he doesn't report it. A final example is taxpayer learned she should have filed but avoided filing. In the current year, Maria learned that she's supposed to file an FBAR because she has several types of accounts. She goes to the CPA. The CPA tells her she has to file, but she doesn't. She picks a new CPA, and the CPA asks if she has foreign accounts. So this new CPA, she says no because she knows if she says yes, then the CPA is going to ask her a bunch of questions. She doesn't want to disclose it, so she doesn't. This is a form of willfulness. These are just some common examples we see. Like I said, if you're out of compliance, there's various programs you can use to get into compliance. Even if you're willful, there's the voluntary disclosure program. There used to be an offshore offshoot called OVDP. They got rid of the VDP, the traditional one's been around forever. They created an offshoot of it, OVDP, and then they got rid of that in 2018. But you can still use the traditional VDP to do offshore and domestic. If you're non-willful, you have lots of other opportunities available. You've got the streamlined filing compliance procedures, you have delinquency procedures, and you have reasonable cause. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.